Yeah, okay. Olabode, I'm looking at page 45 of your report, and of course, this is an open secret that the federal government to seek refuge in the external debt market in 2018. That's already taken as given. So if I have some dollars in my DOM account, would you advise that perhaps I should just drop a little bit of treasuries and Naira bond and invest in, follow the federal government to the international debt marketplace, because that looks like where this administration will play in 2018?
Yeah, I think we expect that, we are going to see more Eurobond issuance from the federal government in 2018. We already saw some part of that in 2017. In 2017, we saw the government raise about $4.8 billion debt from the foreign market. We expect that to fund the budget of 2018. We also would expect huge foreign currency borrowings in 2018, and that's going to be a given. However, your decision to actually invest in Eurobonds or just invest in the local currency debt is going to be a function of expectation for FX. If you actually invest in the Eurobond that the federal government will be issuing, we expect that, depending on when the issuance is being done, you probably see that the rates is going to close maybe between 6 and 7 point something %. Again, depending on when this issue comes up, and that's a function of the rates that we've seen in the last few issuances. So if you look at 7%, I think is attractive. I think 7% from the federal government is attractive, and you probably want to look at it. But another direction you could look at is that if you invest in local currency debts, you could actually get as high as 14% from the bonds that they will be issuing in the local market. So 14%, 7%, that's significant difference. There's a significant difference there. But you also want to take a view of what you expect exchange rate to be. In our own view, we believe that exchange rate is going to be stable in 2018, and it's going to be on the back of improving oil prices or stable oil prices, and also improving volumes from the crude oil volume from the Niger Delta region. If we continue to see this, exchange rate is going to be stable. And if exchange rate is stable, I would rather raise local or buy local debt than buy foreign debt.
Okay, let's switch into equities, where that looks like the golden geese of the market as we speak. So that was a very nice 2017. Well done, every one of you. Then we're starting the new year looking very decent as well. 2018, we've done north of 3%. We're close to about 4% already in the new year. Not a very bad way to start 2018. So what's your outlook on equities?
Our outlook on equity is quite positive, save for the fact that 2018 is actually a pre-election year. We would have expected a very strong growth in equity performance for 2018. But one thing we would actually see is that, just as Michael mentioned earlier on, pre-election jitters always brings about a lot of uncertainty in the market. And what you realize is that a lot of investors like certainty, they like continuity. So if, as the political environment becomes, more uncertain as you approach 2019, we expect that, you begin to see market reaction in the negative direction. But that being said, we still believe that the market is going to close up this year. We expect between 15 and 20% return for the market. Most of our expectation of return is going to come in the first half of the year. We believe that the first half of the year is going to be significantly stronger than what we're going to see in the second half. And although we don't have a large enough sample size from past pre-election years, given that our democracy started in 1999, but the last 4 pre-election years, we've actually seen mixed closes. In the last pre-election year, that's 2014. 2014, we recorded a loss. The market lost that year. But we also want to note that that was when we began to see significant moderation in oil prices. Given the fact that we expect oil prices to be positive in 2018, we believe that the market is going to close up, and we expect that most of the sectors are going to contribute to this growth.
Let's fix FX into the equities market play and some of the rankings or index of which Nigeria market is also included. For example, the Frontier Markets Index of the MSCI. Do you think the I&E window, of which we've done relatively well over the last, well, still less than a year, April 2017, specifically speaking, do you think we'll be able to improve our ranking within that? Do you think the I&E FX window will take us back to the JP Morgan Emerging Markets Bond Index? Will it take us back to the Barclays Index as well, from which we were removed in 2015?
Yes, I think that one of the best things that have happened to the Nigerian market in the last 12 months is the I&E window. From inception, we've actually seen a lot more activities on the market following the introduction of the I&E window. It's also important to note that what a lot of investors want, particularly the foreign investors, is not only that your currency is stable. They actually want to be sure that your currency is liquid, so they can actually come in and go out whenever they want to. And they also want to be sure that your currency is actually determined by the forces of demand and supply. What that does for them is that it helps them to be able to predict what currency is going to be. So with you being able to predict currency, you can actually decide when to enter into the market or go out. I think the I&E window has been very positive for the market. We actually saw that the I&E window, MSCI was actually considering Nigeria for a standalone index. We wanted to remove us from the MSCI index to a standalone index because our currency wasn't liquid enough. But what we had seen is that it actually reversed that decision, and we believe that as the CBN and all the regulators continue to engage MSCI and JP Morgan, we probably would see an inclusion of the Nigeria, particularly the Nigeria bond, back into the JP Morgan index. And you actually want to realize that from the introduction of Nigeria into the JP Morgan index sometime between 2010 and 2012, we saw significant rally in the markets then, and that could actually lead to even significant moderation in yield if we see this happen.
Okay, we need to talk about your stocks picks for 2018. Let's discuss that in the final part of the program. Olalekan Olabode, the head of research at Vertiva Capital Management, live from our Lagos studios. Let's come back to you after the break. Let's see what your convictions are for the new year, and let's see what your stock picks are from those across the about 25, 27 sectors we have on our market. We'll be right back into everyone. Stick around. The final part of the program. Business Morning.